Hey, how you doing? This is Adam Post, publisher of more than 1,000 independent comics, and anytime I see news about DC Comics and WarnerMedia, I gotta take a look. You know something? A great chance that DC Comics is going to be sold as part of WarnerMedia to a larger company or another company in the next, I would say, 2 years. I'll tell you why. I'll get into it with the article, because it's not just me saying this. Before we do, be sure to subscribe to the channel, click the bell for notifications, and give me a thumbs up. It's a huge help when you like it. All right, this is coming from an article in puck.news, and it's called Zaz Optionality and Elon's Complaint. But we're just dealing with Zaz, David Zaslav, who is the CEO and president of Warner Discovery. They're going through a lot right now. They were recently merged with Discovery, WarnerMedia, through a deal with AT&T, they say worth $43 billion. I will tell you this. I do think that it's at least a 50-50, but very likely within 2 years, you'll see another deal. Now, I will also point you to my August 12th, almost 2 years ago to the day, video where I said DC Comics owner WarnerMedia will be sold within 2 years, ? And, I said it would be, that I expected them to sell it or do a spinoff, meaning take it out of AT&T and have it be a standalone company. It definitely looked like they were going to do that, the way they were positioning it to have Jason Kilar running it. And he was one of the founders of Hulu. So there was a good chance to me, anyway, that could happen. Other people were saying it too. But yeah, I thought they'd sell it. Do I think they're going to sell this one? So much depends. But let's go through the article, see what you think it says. And certainly we'll go over some of the numbers and we'll talk about it. Well, I hate to say I told you so, but it looks like we're heading into the very scenario that the author, along with cable pioneer Tom Rogers, hypothesized on Wednesday as being a real possibility, that at some point, relatively soon, David Zaslav is going to have to do something with Warner Brothers Discovery, perhaps even merge with NBCUniversal to make a viable long-term enterprise. In other words, a viable long-term business, something that can continue. On Thursday, during Warner Brothers Discovery's quarterly call, Zaslav, lowered his guidance for next year, prompting investors to dump the stock. The question now is whether Wall Street will be patient or Zaz's finger is hovering over Brian Roberts' name on his speed dial. So when they're saying that the quarterly call, they had to announce that their numbers were off, they're literally taking in $2 billion less next year, not just in revenue, but in income, a version of income called EBITDA, cash flow, that they're not going to be getting in. They do not have a small debt. We've gone over the numbers. I'll go over the numbers in a little bit. Look, the brutal fact is that Warner Brothers Discovery has $56 billion in debt today, which is a huge number, and it's mostly rated by credit agencies just a rung or two above junk. So what does that mean? Well, what he's saying is $56 billion looking at the financials. So this is the balance sheet. Don't be intimidated by a balance sheet if you haven't seen one before. A balance sheet is just assets, what you owe, and liabilities, what you owe. And then the difference between what you own and what you owe is your equity. That's your capital in the stock, paid in capital. Okay? So looking at liabilities, it's $51 billion in non-current debt, meaning debt that doesn't need to be paid. I think non-current, you'd consider that, say, 2 years. So it doesn't have to be paid within 2 years. In terms of paying the principal, they have to pay interest. And different parts of it. So debt is usually done, they would do like chunks of debt. They might do $5 billion at a time or $10 billion at a time or $2 billion at a time. So different amounts of it will come due and then they'll have to refinance. That is where this could be a bit of a problem. But in addition to that debt, they also have this deferred income tax liability, which basically is when you owe taxes according to you, how you track your financials as a corporation, but it's not necessarily due to the government to be paid just yet. But it still needs to be paid. It's not a joke. It's going to have to be paid. And other non-current liabilities. So these are long-term obligations, similar to the same kind of responsibility as debt. $9.8 billion. When you add it all together, they have $89 billion, $293 million in liabilities, in basically in bills that need to get paid. And it's not just that, because they have plenty of assets. That's good too. They have more assets than they have liabilities. Fine. But there's always a timing issue when you're in business. You need to have the cash that you need to have when you need to have it. Even if you're really, really profitable. One thing, my accounting teacher always, it was interesting because I'd been in business for myself in college, publishing comics while I was in an accounting class. And the accounting teacher asked the class, like, what's the most important entry on the balance sheet? And nobody knew. And I raised my hand. I'm like, it's cash. And he's like, yeah, it's cash. Because you can run out of profitability. You can run out of other assets. But if you run out of cash, you're out of business. And that's the kind of threat. Not that they're going to get thrown out of business, but as the article says, when your debt rating is not good, when you're basically, like, we all have credit scores, right? When your credit score is low, that means you have to pay more to borrow money. So if you can get it funded at all. Now, nowadays too, interest rates are going up, even for excellent credit ratings. So this is to mean that if you get to junk level on debt, junk is like Michael Milken, Junk Bond King, if you're familiar with that. If not, it just means that the businesses are considered more risky than, let's say, very stable businesses. And again, that's not something, as the article says, that is Zaslav's fault, because he inherited it. But he agreed to take all this debt from WarnerMedia, and the creditors signed off, and there was this other big separate $30 billion financing that was done. But that said, he said to the investors and the debt holders that he'd find these $3 billion in synergies, meaning $3 billion in merger savings. We already talked about layoffs and cuts in other videos. Definitely check them out. And that was also when Warner Brothers Discovery's EBITDA, which is basically a gross income less immediate expenses before you have to do certain deductions. Basically, it's rough income. You can consider it that way. That's before they discovered that the rough income would be $12 billion instead of $14 billion because of what Zaslav called bad projections from WarnerMedia. That's a big decrease. That's $2 billion more that you have to find. I mean, it's 14% is a lot. So we all have to pay our bills, right? If you were paying your bills at the end of the week and you had 14% less money coming in to pay those bills, this could be a problem. The other issue is that debt, that $56 billion in debt. They're not talking about him not necessarily having even enough EBITDA, even if the cash flow goes down, right? He still may have more than enough to make his minimum payment, like when we make minimum payments on credit cards. But he's got to refinance that debt on an ongoing basis. How much of it, this would get very complicated. But suffice it to say, things happen. There are all kinds of timing issues in business. You're dealing with big numbers like this. Also, if their results fall below a certain level, there are certain rights that are usually part of debt where they could say, hey, your EBITDA is falling, your income is falling, you just canceled the Batgirl movie, and other things are going wrong at your company. But basically, they call material adverse changes. There are changes in some of the deals that they make with the banks and people they borrow money from, and it could mean that they have to pay the debt off quicker. They have to pay a higher interest rate. But even if they just have to pay as planned with the debt, and let's say they have to pay off a $2 billion in debt, when business is good, it's easy to get another fresh $2 billion and kind of keep floating it. Like if you just kept putting it on your debt credit card. You have spent $8,000 or something, put it all on credit cards, pay that off, and then have the new 8,000 in credit to keep rolling it over. You can't roll it over if things aren't going well for the business, not nearly as easily. Okay, that revision came as a surprise to equity investors, meaning stockholders, causing Warner Brothers Discovery's stock to fall 17%, that is a big drop on an announcement. 70% is no joke. Equity also is tied to debt in a way that, like, if their stock goes down, it makes debt holders very nervous. Brian Roberts is no doubt monitoring the situation at Warner Brothers Discovery. And why would he care? Because it would be a great complementary merger to put NBCUniversal with Warner Brothers Discovery, like from a business standpoint. Although the Reverse Morris Trust, so this was the spin-off merger deal, will prevent Warner Brothers Discovery from entering into any kind of joint venture with Comcast NBCU for at least another 18 months. So on the other hand, given how long it takes for such combinations to get regulatory approval, there's no time like the present to see if a combination between Warner Brothers Discovery and NBCU makes any sense at all for Zaz and Brian. The author thinks it does. I haven't thought about it deeply, but, let's look at some of the numbers. None of them are saying a peep, of course, and it's probably 6 months too early for any kind of serious conversations about how the joint venture could work. But let's face it, even though both NBCU and Warner Brothers Discovery are not smart companies, they are competing in the land of giants and probably each need to get bigger. NBCU, with about $6.5 billion in EBITDA, is probably worth around $75 billion these days. Warner Brothers Discovery's business value is about $88.5 billion. It's $35 billion of equity plus $56 billion in debt, minus $2.5 billion of cash on hand. Roughly combined, they're a $150 billion competitor, accounting for some sales of some divisions. So when you combine companies, just to have the Justice Department give permission for it, they want to make sure there are no monopolies going on. So they would have to probably sell some parts of the combined company. And Disney has an equity value of $200 billion. So it would make sense in terms of scale, in terms of being a big enough company. But there's a lot of other big companies out there that could write a check. If it's $88 billion, Microsoft could do it tomorrow. Apple could do it day after tomorrow. Amazon has had some problems lately, but they also could write a check. And even though they're already a competitor with streaming, it's workable. It's something that's conceivable. Google maybe wants to get into the entertainment business. Write a check. There you go. You got yourself a studio, streaming, channels, all sorts of stuff. A key part of this probably would really be David Zaslav wanting to stay with whatever the combined business with. The thing that would benefit putting the two companies together would be if you combine that $6.5 billion in cash flow with $12 billion from Warner Brothers Discovery. That is a lot of money to play with, and then they'd have yet more, quote, synergies, end quote, where they could fire a lot more people, close a lot more offices, and both of them save money for the combined business. The author says that they worry a lot more about the $56 billion in debt and whether the credit rating agencies will use the revised EBITDA, say the $2 billion less per year they plan on making, number as a catalyst for a downgrade. So, if they have that downgrade, like I was saying a little earlier, and they're in the junk status, which really could happen, like it's a real thing. It could happen tomorrow. Then, in addition to the $2 billion in less income they need to deal with, which is a lot, they would need to deal with their debt being considered junk, which would be terrible. The only way to get out of your debt being considered junk is they need to have people come in and put in more money for equity. So they need to take in new investment, or they could pay off some of the debt or additional amounts of debt. But they really don't have enough cash. They have plenty. Look, they have more cash than I do. I mean, look how much cash they have on their balance sheet. You can go look at stuff like this. $2.5 billion. That's a lot of cash. yes, 2.5 billion is a lot of cash, but even if they could clear out all of their bank accounts today and pay down debt, what does that do to a $56 billion debt? Nothing. It doesn't even pay off the debt. It doesn't pay off, what is it, like 5% of the debt? It's not a lot. That's why I think there's a good chance that, look, WarnerMedia was sold by AT&T. I mean, they did a spin-off with a merger, but that's a sale. I mean, they got rid of it. They had just bought it a couple of years before. So the odds of this thing being sold every 2 years are actually pretty good, because that seems to be what they like to do with this company, is like, well, every 2 years, let's go ahead and sell it to somebody. Why not? There's always money to make. I don't know if you know this or not, but David Zaslav actually made, good for him, $246 million when the merger was done with Discovery and WarnerMedia. So a lot of incentives for things to be sold and there to be a merger. And if you noticed, it's not like David Zaslav lost control of the company when they sold from AT&T. A lot of times a company gets sold and you do lose control. They kick out the management and things like that. But not Zaslav. They wanted him. They wanted him. The people that backed Discovery Plus would not have done this without Zaslav being there. So another transaction, in case Zaslav wants to make another $250 billion or whatever, in a couple of years, he's got something he wants to buy. I don't know, a small planet or something like that. That's a good incentive to say, hey, let's do a merger. I'm not so sure that I wouldn't say the same. Put in the comments below if you think for $250 million you might make a merger. $250 million to you, not even for the company and the shareholder, for you. I would do it, okay? But let's not go there, at least not yet. While the revised EBITDA brings Warner Brothers Discovery's debt to EBITDA ratio, which is the debt to the cash flow coming in the door to pay the debt, to 4.7, making it borderline troublesome. There's also the issue of 2022 debt to EBITDA ratio. On the investor call on Thursday, Warner Brothers Discovery lowered its EBITDA estimate for 2022 to between $9 billion and $9.5 billion. So just short $500 million. It's $500 million. Let's give Zaslav the benefit of the doubt at $9.5 billion. That means Warner Brothers Discovery's 2022 leverage ratio is nearly 6 times. So it's 6 times, the debt is 6 times bigger than cash coming in the door, which is the kind of debt multiple that leveraged buyout moguls feel comfortable having, but not Hollywood titans. So meaning you've heard of leveraged buyouts and things like that before. When people buy a company, they put a ton of debt on it. And the reason they do that is they take the cash flow that comes from the company to pay off the debt, and they wind up getting the company, if not for free, which is pretty cool, they get it for a very cheap price because you only put a certain amount of money down and then you pay it off over time, but it's paying it off with the profits from the company or from selling part of the company. Definitely layoffs are a big consideration, and cutbacks and things like that. And sometimes people have made billions of dollars doing that. It's a big industry. So it's not to say that Zaslav can't pull the rabbit out of the hat. If anyone can do it, it's probably Zaslav. But what last week's news makes clear is that the bar that Zaslav now has to clear has gotten higher and more treacherous, the exact opposite of where he was probably hoping to be right now when he made the call to John Stankey, who was the CEO of AT&T, and they worked out a deal. In the meantime, there will continue to be more operational fallout across the various Warner Brothers Discovery business units beyond what we've already seen. That is true. Meaning there will be other problems from other layoffs and mergers, and just anytime, even if the numbers don't get messed up and there aren't like smaller projections, a merger where you're putting two things together, it is so complicated. It's like a marriage. Everything changes, okay? Everything changes, and nothing is what it seems. So wacky things are going to happen. If you've ever been involved in a business merger, or, hey, a marriage where things went a little bit odd and not as expected, put in the comments below. There's a reason that Matt Belloni, okay, this Puck is a great website. You should definitely check it out at puck.news. But they made a reference to the CFO over at Warner Brothers Gunnar Weffel's alternatively as the Axeman and the Hatchet Man. If they were the Zaz, they'd be thinking about playing some golf with Brian Roberts pretty soon. In other words, talking about a deal, like let's figure out some numbers. Nothing buys time with investors quite like the announcement of a big, complicated joint venture that won't close for 18 months while it winds its way through the SEC and other Washington regulators. So he's saying it would be smart for the chief financial officers to kind of get together and start figuring out, hey, is this something we can actually do? Because if it is, people won't bother us, and maybe we can make another couple of $100 million personally and get this deal together. I think Zaslav is good. I think he's doing a lot of good things at Warner Brothers Media right now. Let me know what you think in the comments below if he is. I like the decisions he's made to try to have brands be respected. And I think it's going to work, but you tell me what you think. Tell me if you think they would sell WarnerMedia or not. I will see you again soon with another video, and I'll also include a link to this prior video that I made talking about the sale of WarnerMedia, predicting it, so you can check that out too if you like. And I will see you again soon with another video, and if I don't see you, I will miss you.